Last year, rail car use cost $400. Late this summer, the cost skyrocketed to more than $3,000. That matters to U.S. cattlemen.
There's been this real logistical jam, if you will, due to rising energy production in the United States, particularly in North Dakota. North Dakota now producing 1 million barrels of crude oil a day, and that competing with agriculture in terms of rail car availability. It's going to pressure basis levels to the farmer because the grain farmer is always the one that bears the weight of all this. And unfortunately, there's going to be mounds of gold, corn stored across the ground, if indeed the producer doesn't think about his storage options and availability come the harvest time for him.
Cattle feeders in the Midwest will benefit.
Those that are closer to the corn, the big supply of corn, are going to be an advantage because they're going to have cheaper basis levels and the availability of that supply. If you were in a situation where you're in, let's say, North Texas or maybe New Mexico, where you rail in a lot of corn, that rail availability will be diminished, and of course basis will be to you somewhat higher.
Bossy predicts a high-fed cattle price between $162 and $168 per hundredweight.
We honestly at Ag Resource can't figure out how we're going to be able to produce enough calves or feeder cattle to expand the herd and of course produce enough beef in this country. As we think about the next 3 to 4 years, it's going to take an increase of at least 9 to 11% in the U.S. cattle herd to get us there, and that doesn't seem likely with beef prices and cow prices at record highs.
Beef prices will continue to rise, putting the burden on producers to make sure they provide an eating experience that's worth it.
Generally speaking, we're quite encouraged at the ability of consumer to withstand and absorb the higher beef price that we have today.
Bossy spoke at the recent Feeding Quality Forum in Kearney, Nebraska and Amarillo, Texas. I'm Cindy Campbell.